All right. Greetings to you again. So this particular class or this lesson today is just based on how to backtest. All right, how you do backtesting. Remember, backtesting is the how do I put it? Is the highest thing that you need after you have been given the information that you need. Right. So if I teach you some lessons, I mean, if I teach you something and you don't backtest it, you are doing no good to yourself and it's actually not going to help you at all. You understand? It's actually not going to help you in any way. In any way, it's not going to help you at all. You understand? So it is very important that when you are being given something, especially in forex trading, when you are being taught something, you should backtest it. If you don't backtest it, I'm telling you, you are doing no good to yourself, right? That's why you will see some of your classmates, they'll be doing extremely well, and yet you'll be wondering like, what's wrong with you and all those things. I mean, if you put in the work, right? If you put in the work, you are going to get it. You're going to get it done. All right. If you put in the work, you yourself, you are going to enjoy it. You are going to see how it has opened up your eyes. I mean, you'll be seeing things, and then you'll be surprised. Okay, you'll be surprised. Okay, so that is what I'm saying. You must backtest. If you backtest, that's how it's going to help you to be able to if you backtest, that's how you train your memory, train your mind. That's where the conviction comes in. You have to build your conviction. You need to be convinced. You need to be confident in what you are trading. Now, for example, this is Euro USD, right? So we talked about order block. This is an order block here, right? This is a bearish order block, bearish OB. That's a bearish order block from the weekly time frame. Now, this order block gave us a break of structure here. This is a BMS, right? BMS. Let's put it at the bottom and at the left. Okay. It did a BMS. That is, which means that price came from this swing and then it took this low right here. So now, suppose that price was still somewhere. Suppose that price was still somewhere around this area, meaning that we did not yet see. Let me just. There's something that is disturbing my screen. I don't know what that is. I don't know. Close this. Something is open and is disturbing my screen. Just give me a second. Please move this window away from the shared application. What is that? Let me just stop sharing for a while. Share some optimize. Okay. Okay. So, like I said, let's suppose that price was still somewhere here. Price was still at this level. And then we have marked out our entry level that this is where we want to sell. This is where we are looking to sell. Now, if you haven't back tested, you will never be sure that price will likely react to this level. You will not be sure to even sell here. You will not have that confidence to sell at this area. That's what I mean. You understand? You will not have the confidence to put on a trade here, but you know that this is a downtrend. But that's why you will see some people will start selling here because they have seen some bearish candles. All right. Now let me just go to the daily time frame and show you something. Now this is the daily time frame. This is the daily time frame. Oh, what's that? So when on the daily time frame, somebody might just see you just see a down candle or a down close candle, and boom, you already start selling. You start selling. I mean, that's because you never had the confidence at the first point. All right. You never had you were not yet, you were not sure. You were not sure at the first place. All right. What is happening? Network is disturbing a lot. All right. Okay. Let's close this guy. Okay. So if you go to the daily time frame, I just saw a candle here, and that this particular, you see, price gave us this close, this doji here. A lot of people will start selling from here. Why are they selling here is because they haven't actually backtested to know that price will actually come up to this other block of the weekly time frame, right? I mean, price will be giving you manipulations here to sell, but with your backtesting method, you will know that actually it's high probability that price will come up to this level before it sells, right? So when you go to, let's go back to the weekly time frame. Now, this is the only place that we want to place our sell in, right? We are waiting for price to come up to this level. That's what professional traders do. You wait for price at a particular area. Okay, you wait for price at a particular area to sell at it. You don't chase price, you don't run after price, right? Because normally price before coming here has to take internal range liquidity. So you're going to be seeing manipulations down, and that is to grab internal range liquidity. And if you start selling, you are going to be used to as liquidity before the final sell goes down. All right. So all this I'm trying to explain is to make you understand that you have to be backtesting. You have to backtest the concepts that you know, so that it will help you. You build your confidence, you build your conviction. And when you see things like this, you'll be able to trade them, right? When you see a trade, you'll be entering the trade with at least with some confidence, but not putting away your risk management. Okay, you'll be entering the trade with some kind of confidence. You understand, knowing that this trade is going to work out because you have seen it in the past and it has worked out, right? So now, just this little back testing that we have done, let's see if we can see something similar again that happened like this. All right. So as we'll be going back, I'm going to show you now. For those of you that doesn't have the replay mode, this is what you can be doing. You just go back in time, you see how price react to, you see price gives you a reaction, like for example this reaction here. Now if you see price sell off like this, right, you just try to look what happened, that price sold off, where did it start to sell from. Then you can see that there was an imbalance here, right? There was a CB here, and then price came back to it, it rebalanced it, and then it sold off, right? That's how you do your back testing. You look back in price, you see areas that price were reacting to, you study them, you look at how price returned back to this level. This is internal range liquidity. All right. This here is internal range liquidity. This is because price doesn't move on a straight line. All right. So in a zigzag way, as price is moving, it has to be rebalancing this area. That's most of the reasons for the pullback. Price will always be moving in a zigzag way. All right. So when you see price expand down, you spot the internal range liquidity that price will be coming in for. If price is coming back here, where is it coming to? It's coming to rebalance this. I don't know if I've dropped a video on the BC and the CB already. I'm going to drop it maybe later today or tomorrow. Okay, it's that video is an eye opener. You should make sure you concentrate on it. You watch it like more than 10 times. It's very important, right? So that's the internal range liquidity. Price comes back to clear it. So your main work as you're back testing is just to look at areas that price have reacted to with what you already know. All right. So let me just put down the things here. Now we have one, which is CB. We have two, which is BC. We have 3, which is order block. We have order block. This can be bullish or bearish, right? Bullish or bearish, and we have that's a CB, you have BC, you have other blocks, bullish or bearish. We have break of structure, break of structure, no, break of structure, break of structure. All right. I think these are the things that I've given you guys so far yet, that you can use them for your entries and so on. So with this guide in your mind, right? I want us to, when you go back, when you're looking at price, you'll be looking at to see whether which of these price reacted to. You study them, you study the movements. Now, this here is called a volume imbalance. When price jumps and then it opens in a different, it opens right down or up. It's a volume imbalance, and price always come back to rebalance it and then continue. This is also an internal range liquidity. Okay. So here again, you notice price expanded down. Price expanded down. It created an imbalance. Price has to come back to it, rebalance, and then it continues down. You can see all these areas. Anytime price expands, creates an imbalance, it always comes back to rebalance it, right? So now I want to show you something. Okay, let's just look at this one. This is now an order block. Price break structure here, right? Where is the main, the big, the last down candle is this red one, right? So that's your bullish order block. Price came back to it and then it bought right up, okay? So this is the weekly time frame. Price is fractal. What I'm showing you here, can be seen on all time frames. Let's even go to the one hour time frame, or even 15 minutes. Let's just see 1 hour time frame. Reset chart. Okay. Okay. So now if you are using replay mode, you'll be like, okay, why did price react to this level? Why did price turn from here? There you go. This is your BC here, right? That's your BC, and it's also retesting this level. This is a breaker, right? I gave you a lesson on that breaker. Breaker takes liquidity, it takes stop loss, it takes a stop loss down, right? So you see that from here, let's just say, okay, from here, price went up, came down, went up, took that. This is now a breaker. This is called a breaker. Price takes liquidity down. You see that area. Now, inside the breaker, we also had a BC. So at this point, you take your trade from here, can put your stop loss below this candle, right? And you'll be aiming for this high. As simple as that. All right. I mean, you just have to be looking at areas where price reacted to, so that as you trading, you will know that, okay, this is likely a place for price to react to. Now, if I'm looking at this place, where will I think that price will react to? I already have this is a BC here. I have a BC here, and it's also like retesting this high. So at this area, this is also an order block here, okay? This is also an order block here, which means that this is a region for me to buy, okay? This is a buying region for me, right? That's if you are using the replay mode. But if you don't have a replay mode, you just have to watch price, see how price react to levels. I mean, you mark them and then you see how price reacts to them. And then when it comes to it, you study the way price reacted to it, and then that is it. So if you buy from here, your target will be right up here. Look at this equal highs. That's where there's liquidity. You see it, right? It's very simple. You just have to mark out the area and then you wait for price to come to it, and then I mean, you sell, that's all, right? So now let's look at this one again here. This is another level here. I told you about mitigation blocks as well, right? So now we have a break of structure here. This is a BMS. BMS, put it at the top, okay? That's our BMS, right? So now this low didn't take out liquidity. You understand? This low did not take out liquidity. So this is not a breaker. Price will not just react from this area. So this is the mitigation block here. So I can bring it a bit down also so that it touches this high, because that's where the mitigation level is, right? So from there, if I want to buy here, where will I be taking my profits? I'll be taking my profits at this high. This is external range liquidity now. So if I'm putting an entry here, putting my stop loss below this area, I'll be targeting this high as external range liquidity. Okay. This BMS shows you that there is a change in structure, right? Normally we are on a downtrend. We are on a downtrend, right? So but price has now changed direction by breaking an old high, which is a confirmation for a structure shift, right? This is a lower high, lower high, lower high. This is a lower low, lower low, lower low, lower low. And then our price give us an SMS movement. It breaks structure. That's a reversal pattern. I think I taught you guys on that on market structure, right? So at this point, we are waiting for price to come back down to a discount zone and we buy up to this external range liquidity, even to this one as well. Okay. This is all external range liquidity now. Okay. So let's see how price plays out to it. Let me bring this, my entry closer. This is just how you backtest, right? You can just make like this now. You play price, see how price is reacting to it, and then you study the movements, study, and then that's how you backtest, right? You see how price hit the mitigation, a mitigation level. That's why if you could focus only on this other block without knowing which pattern is actually playing out now, you will be on a loss, okay? Price gave us an SMS, which is a mitigation level, right? Price should be going down, then it doesn't take liquidity, it goes up, it breaks structure, then it comes back now to mitigate, okay? So now, away from that, let's see somewhere here, okay? Let's just look at this area. I'm doing foresight so that I don't mix your mind up. Okay. So now this is a downtrend, right? This is a downtrend. Price has broken structure here. That's our BMS, break of market structure. Let me put it down, bottom left. Okay. That's our break of structure right there. Now, where did the sponsorship start before this break of structure? Where is our order block? This is the last up candle here. This is our order block. All right. So when I mark that order block, I put my entry on it, put my stop loss above the order block. Now, where will my take profit be? This order block is internal range liquidity. Okay, it's called internal range liquidity. Price is coming back for internal range liquidities before now it comes down for external range liquidity, which is a sell side liquidity. Okay, and then now if it takes that low, it definitely price is coming down to take this as well. Okay, this is external range liquidity. So from internal range liquidity to external range liquidity, that's how price books, okay? Internal range liquidity to external range liquidity, okay? So let's just play and then see how price plays out here. If you have a question, you can type it on the, the chat area. I think I will see it. So I don't want a noise on to disturb now. Let's just play this out and see. Remember, I'm showing you how to backtest if at all you have the replay mode. All right, but for free, there is free replay mode for all trading view, and it ends on the daily time frame. Okay, from the daily time frame upward, you can still use the daily time frame. Remember I said price is fractal. What we are doing here, you can actually see this printed out on the weekly, 1 month time frame, 1 year time frame, even the daily time frame. Okay, so the things repeat. Whatever price is fractal. Okay, anything that happens on a higher time frame, it happens on smaller time frame. It happens everywhere. All right. So this is just simply how I'm backtest. And now if I see this thing work out, the next time I see it again is actually going to work out. You understand? I mean, there will be high probability for it to work out. You understand? So price did this, came back to our other block, is sold right down. Okay. That is just simply how backtesting is done, guys. Simple. Okay. Now let me show you this one again. Okay. Let's look at this one. Remember I said from internal range liquidity to external range liquidity. Now you see this kind of a candle here. This bullish candle. Remember I said when you see strong moves like this, they show you that the institutions are the ones sponsoring that move. And you know how, I mean, you know the theory behind somebody said he's not getting me. Is that true? Right on the please just type a message. Are you guys getting me?
Yes, we are getting you.
Okay. I don't know, Ferrado, his volume is surely not good. Okay. All right. I told you that when you see long candles like this, the big institutions, they are the ones sponsoring those particular moves, right? And you know how their orders are being put. They put half of their orders, they push price up, they come back down, they mitigate the orders, and then they push up prices again. And another explanation is that here they buy and sell at the same time inside this candle, all right? The last down candle. That's for the other block. Please, you can rewatch the lesson again. So inside this candle, that's where the volume is. So the volume is inside this candle. That's why you choose it. Now, we are going to be waiting for price to come back to this particular candle, and then we buy it, all right? If we are buying from here now, we'll be targeting this high. That will be in our external range liquidity. So I'll just simply mark this. I'll say, okay, my buy entry is from this other block. My stop loss is below it, and my target is this external range liquidity. Now, where is the internal range liquidity? Look at this area. This is a trend line. This is a trend line phantom. Internal range liquidity. Price is going to clear the stop loss of people that are buying here already, because there is the origin of the move started right down here, and the banks have something to do here. Okay, if this candle could have come right down here, price will not come down to this level again. You understand? So let me just play price. You see the movement. Price has gone to the TP, excuse me. All right. Now, price has taken this high without coming to the POI, but this doesn't mean that this POI is not really that strong, okay? Because you can see the movement away from it. It shows that the institutions still have something left here. So my target now will be this high. So my target now will be that external range liquidity. Now, this is to confirm we are still on an uptrend, right? This is just an internal structure that has been formed. We are still in a clear uptrend until this low is taken out. All right. So let me just play that out. Let's see how it goes. So when you do this kind of work, I mean, you look at the charts this way, you will know that anytime you see such a huge candle like this, try to mark out the other block, you will know that something like this is actually going to play out. You saw it play out sometime. It's actually going to play out again. Just like that. It's very simple. Let's see if we can see some clear examples again. Remember, I said the first thing is for you to know where price is going to, right? When you know where price is going to, you will know the kind of order blocks that you are going to choose, right? You will know the kind of order blocks that you're going to take. Look at this fair value gap here. Price came back to it. So you should not, when you are in a buy, let's say you bought from this order block here. Why? Because price is in an uptrend, right? You actually bought from here and then price is going up. You know that there is an obstruction on the way. Immediately price hits that, you can now, you close like 80% of your trade because you know that this has to give a reaction. But it doesn't mean that as there is going to give a reaction, you are going to be selling. No, right? So you just have to, now a good way to do it too is you can just make your entry like this. You put that this is where your take profit is going to be. You extend it to the right. Now you go to here, you click copy the chart, you go and paste it somewhere, either on your Microsoft Word, so that at the end of the day, you can print it to a PDF file and then you watch it again, you watch it over and over again. That's how you create your own journal, right? The last down candle here, you mark it out. You just put it like this. You take your take profit up, right? So you're on your chart now, you annotate that this is where I have the break of structure. This is my order block. You mark out. You can click the rectangle. You go to settings. You put it there, bullish order block. Okay, bullish OB. You put it at the inside and at the center of it. That is it. You mark it like that and then you screenshot. Okay, you put it somewhere. I mean, that's how you'll be able to track your movements. Okay, now you here again, you mark out your bullish order block, the last down candle here, right? The last bearish candle, you mark it out, you mark where you have your BMS. This is your break of structure here, right? Then you put your buy order there like that, and then you put your stop loss below it. You move your take profit. Where do you want price to go? If it is this high, then you screenshot it. This is, you are creating images on your head, all right? Your mind now will record all these images. And once you see them on the charts, you are going to recall them very, very easily, right? It will be very easy for you to recall them. Once you do all this thing, you go right back. If you somebody that have the replay modes, you can just make like this. You'll be even instead more easier for you. Then you go right back. You go right back without seeing what is happening. Okay, without seeing what is happening, and then now at a certain point now where you want to start, you can now increase back price if you don't have the replay mode, right? So that as you are tracking price, you'll be seeing the areas. You know that, okay, this is a downtrend, price is going down. When the structure will change, you actually see that price has started breaking structure. Price has started to break a structure which caused a lower low. What's the meaning of that? That price is about to change direction, right? And if price is about to change direction, you will know what to expect. Okay, so just from here, you would have taken this trade, but there is no clean order block here. Remember the qualities of a good order block, you should have huge movements, right? There should be strong movements. Okay, yeah, for example, like this one here. If price is to be bullish, then price has to respect this order block. I don't want to go to the higher time frames because when I will go to the higher time frame, we are not going to see this particular area again. All right. But I don't know if price reacted to this later on. It did, but not that much. So this is due to higher time frames. Let me just crop this place and then we'll see what the higher time frame was saying about this area. That's why you always need to start from higher time frames. Maybe from the higher time frame, we were in a very bearish market, you see. So on a higher time frame, we were actually going down and price will actually go right down here. So looking at a smaller time frame will make you think that you are bullish, but you have to look at higher time frames. And if you look at higher time frames, instead, bullish order blocks will be, a bearish order blocks will be the one to hold much, right? That's a disadvantage that somebody does not have the replay mode to have. but it's still okay. You can just be spotting, looking around. You see areas that price reacted to, you mark them out like this. Okay, price came back up to this other block. You mark it out. You can put your sell order there. You screenshot it. All right. You just go and you copy the page. You go and paste it somewhere so that later on you can watch it. Okay. You just go back in time. You try to mark out those areas. If you have a question, you can ask. Just notice we are running out of time. Okay. This is how I used to do my markup when I don't have when I never had a replay mode. This is just the pro version of the replay mode. You just mark like this. You annotate your chart. This is a break of structure. This is a break of structure here. Price came back, RTO, you sell. That is it. When you're on a downtrend, you'll be selling. When you're on an uptrend, you should be buying. Look at this fair value gap here. Price came back to the fair value gap and then sold off. You mark that out. When you have this memory now on your head, anytime you see it on the chart, you easily understand that this particular thing happened, right? Looking at this last down candle again, price came back to it, this last down candle, price came back to it, then you could put your buy limit from there, put your stop loss at the low. I'm not using this doji, right? You always use at least the candle with a good body. That is the last bearish candle with a good body. So all these things, they repeat themselves. You just have to look at price, see areas that price reacted to. You try to annotate. All right, price reacted to this mitigation block here, and we had a bearish breaker here. But if you go to the monthly time frame, you will discover that this price action here was actually in a bullish order block from the monthly time frame. That's why you don't have to play with higher time frames. Okay, you might want to sell here, but why will you be selling in a bullish order block that is even from the monthly time frame? Let me just show you where that is. This is the area here, right? And then you will notice that price was reacting to a bullish order block. So your sell will not hold. Instead, you should be looking to be buying because price is reacting to a very strong level from the monthly time frame. You see how the order block gave some strong moons and then it broke the structure. So there is no way this order block is not going to hold, right? There's no way this order block will fail without giving us a reaction. So on your lower time frames, you don't have to go against the direction of the higher time frames. That's why it's very important to start from a higher time frame. Now, looking at this fair value gap here, if price comes up to this level, it's going to react, right? So if price comes up to this level now and you are selling, you are going to be you are instead buying. If price comes up to this CB here and you are buying, you are instead buying again. You are in trouble because even though price is an uptrend, price will have to react to this level, come back a bit down before it goes up, and then something like that, right? Let's just play that and see what happens. Remember, this is our monthly order block, so price has to buy from it, right? So price will, let's just see if we're going to have a reaction from this CB, right? You see that we have a bearish month, right? A bearish month from the monthly CB, which is completely a very strong trend on the smaller time frame. So what if price should just come to this level and you start selling? You are going to be in trouble because, you instead be buying. Let's go back to the daily time frame. Yes. What I mean is you always have to start from higher time frames. You mark out because looking at this area here, now people will be trying to buy from here because, okay, they are thinking that price is an uptrend, but you need to know where price is currently trading from higher time frames so that you don't get mixed up, right? Normally, like I said, price was supposed to buy. Even though that's a monthly CB, it's just a place to make price give a small reaction before it goes up. The reason why price doesn't move on a straight line. All right. So I haven't seen any message on the chat room. I don't know if somebody have a question. Just go back in time, you spot areas, you screenshot them, you look at what you have been taught. For example, the order blocks, you try to mark out them. Qualities of a good order block, you should have a break of structure, they should have a good strong move, things like that. Just mark them out. You go far behind, you look at price right back. You see how price will react to those levels. Okay. And when you see that, I mean, you cannot unsee it again, right? You cannot unsee that again. See how price is reacting to all these levels smartly. We are on a downtrend, so you'll be looking only to be selling on bearish order blocks. Okay, it's very, very smart. See how price reacted to this BCA. Just marked it out, that imbalance. Price came back again to this